Very good morning, friends. I am Nandakshi Swami. Welcoming back to my channel, Smart Index Search. I need to explain you in detail the logic behind the POC, market memory POC. You should understand thoroughly, then only you can trade better. I'm showing few important things. And also, whenever I take trade, before taking any trade, I don't look at the candles alone. I first try to understand who is in control of the market, buyers or sellers. Here in this chart, this is Nifty chart on 21st. Let me zoom it. You can see over here on 21st, market was coming down, right? Around 11 a.m. 11 a.m. market started moving higher. So you need to understand here the point of control was formed at the bottom and the price was moving higher. Do you notice anything? Let me hide the rolling pivot so that you will see the point of control. This is the daily POC and the daily value area high, and this is weekly POC and weekly value area high and value area low. I've made value area high and value area low in the same color as the daily POC. Do you see here the POC was coming down? That means price was getting accepted lower. Here price started moving higher. Price started moving higher, but the POC was not moving. That means it was responsive buying from the retail traders, and the big players were not interested in this. That is the indication. It was just short covering rally. Short covering rally, and you can see EP was triggered at the top. Why? The reason for this, the sellers were very aggressively. You can see there was a pause in the POC and sellers were aggressive from this trade. So they pushed the price higher to move down, and you can see the next day before closing, the POC came up. The intention was not still, the intention of the big player was not to the upside. So, one important rule you must remember is price moves first and POC comes later. So, I never trade just because price is moving. I'm showing you here on 26, market gapped up to the level of next level of resistance. You can see this is the where weekly point of control. You can see the so much of lines, red dots over here. This is weekly point of control and weekly value area high and value area low. There, the price was getting accepted to sell, rejected from this area, and the price had moved there, and the big players pushed the market, gapped up and pushed the market to that level. Only their intention was to sell. We will not come to, as an intraday trader, we will not come to know the intention of these players. Suppose if you can understand the logic behind all this price action, price behavior, and the POCs, you will start understanding what is the intention of the big player. Big player The intention of the big player was to push the prices higher to sell at this level. Sell because their pending orders will be there. They have not completed their selling orders. Pending selling orders were there. Pending selling orders to they will push the price to the selling orders. And here you can see the price started moving at this level. So rotation, they do rotation because they rotated the price like this. They came that they indulge retailers into the trade, both buyers and sellers. Some people will go for put option, some people will go for call option. This is the responsive trader trading by the retail traders. As a retail trader, me also indulge in such type of action if there is no POC, if there is no indicator telling me what is happening here. You can see from here price started coming down and you can see POC moving down. That means when the POC is moving down, you dot dot dot, it says that price is accepting lower prices. Market is accepting lower prices. That means people are comfortable trading at lower levels, not trying to push the price back up. Usually, when the price comes down, there will be price pushing back up. That is not happening. The price started accepting lower prices. It moves down. Only here it halted. The responsive, it started moving up and down, up and down. This is the area you need to give importance. On an intraday basis, you could have taken a short trade, some initiative buy trade here when the price crossed uh, above this. Do you notice this POC never moved higher? This POC, when the price is moving higher, you can see the same behavior. What happened over here? It was a short covering rally of this selling. So, friends, this is short covering. This is not the buying. So, next day, the EP, bearish EP is triggering at the top on 23rd, and you can see the POC stagnating over here. POC stagnating here and the market stayed standstill. You can see the POC over here. That is an indication that market, it was the indication of the market. It was a short covering rally. They were trying to push higher. Now you can see the POC price started moving down and POC also started moving down. And at one point of time, it halted because this was the weekly POC getting formed. Weekly level market is getting rejected over here, and step by step, this was a unusual behavior. This type of behavior is step by step they are falling, consolidating, making the traders to assume that it is going to go reversal rally, and they are doing that. But if you would have seen, the entire thing was an short covering to sell and rise, not rather on, because it has been split part by part through the days. When it is split part by part through the days, over the days, you get confused. Definitely, retailers will get confused and we try to indulge in trade. For a option writer, it is a boon. This type of presentation, it is a boon. If you understand this, it is a short covering rally to sell and rise. He could have comfortably sold. Whoever sold the call writers who have sold around 25,500, they are comfortably, premium decay might have happened over here. Now, the price has come down and it is coming down to the area from where the price started its short covering move. We need to see whether it is not a buying response from this area. So price, if it gets rejected from this area, if it starts moving down, we can see Nifty going down still further. So understand the POC better, understand the POC better. I'm going to repeat again, when the POC price is moving up, and on the left side it was a deep selling with the POC moving down, it is a short covering rally. It is not an intention of the big player buying, intention of the big player buy. So, with the if the price is moving up, the POC has to move up. If it is moving up, then we can anticipate the intention of the big players. They are indulged in buying. Here, price started getting accepted. It was a gimmick actually. If you go through, it has been split part by part through the days to confuse the retail traders. Finally, the market showed the direction. Finally, that was on the Friday. Well, going, you will keep guessing what will happen. What will happen? Another hack I'm going to tell you on the trade. You see, you need to get a boundary of the trade. So you can easily mark, you have got an opportunity, trading view, you need not take a line or something. You can mark, it comes on its own. Go to the settings, and here previous day close, if you enable this value and line with the price, it will come, and previous day indicators, if you go there, high and low of the previous day, it comes over here, value and line, and you can mark. You can enable this to keep this. This is the previous day low. Previous day low means the previous day, what it is, the low of this, and this is the previous day close. Previous day close, not this close, it will be enabled tomorrow. For this day close, this line will come on Monday or Tuesday when the trading resumes. Now at present, this is the boundary. The price, you can clearly, this will give you some sort of boundary for your trade. Whichever you take the trade, the boundaries will be clearly visible. Only initiative buying or initiating selling will take place if the boundary are violated. Here you have got the boundary. If the price starts moving below this, then initiating selling of the, again, fresh selling of uh, big players will start from here. Here, orders have been accumulated or accumulated from the previous, engaging the retail traders to move down if their intention is to break. When it starts breaking below, that is, if we can make out clear, this is an selling. What has happened over here, the big players made rotational move to sell, to gather orders and liquidity, and they are moving down. So this is how you need to analyze when the market is rotating here. Market is rotating here, and you can understand that. So I will come with more examples of like this. To understand the indicator, POC is very, very important. So roll with the rolling pivot, we will get to know the direction, and the balance of the price with this market memory POC, you will get to know the intention of the big players. That is very, very important. As a long-term trader, long-term positional trader, you can be on a sell side. You could, for example, if you could have taken a put option around 25,500 put option when it came, if you are knowing this, let me go to the 25,500 put option over here. You can see the price. They made it cheap, and this is where you are entering for the at the bottom double this one. You can see clearly in this area, in this move, the point of control is moving higher. Intention of the big player is to buy. So they are buying on dips, they were selling here in this area. The POC is moving higher. This is an indication that when the POC is moving along with the price, that is the intention of the big player to buy at low, and they are pushing the prices higher. Once this POC, I mean, when this is the boundary high and low, it marks high, ask and bid also. If I have enabled ask and bid, you will get to know what is the ask, what is the bid, 422, and you can enable this feature is available for everybody. Most of the traders doesn't know that they can enable the go to the settings. You will get to know this is the closing of the previous day, and this is the high, and this is the low. Instantly, you will get to know on the option chart also, you will get to know. The POC is moved higher and it has halted. So we will see here, the price POC, from this POC, the POC along with the POC, the price has, along with the price, I mean, POC has not moved lower. We need to see what will happen over here, and we need to see from there. This is how you can trade, understand POC, with the price. If the point of control is moving higher, then it is indication that price is accepting these prices. So when the price is moving higher and the POC is also moving higher, it has been buyers are accepting the price. That is the initiative buying of the big players. You should understand that. Thank you very much, friends. Try to understand. Whoever have taken my indicator, for them, I have made this video for clarity, because they were in my group, they were asking, it is volatile POC moves, daily POC moves very frequently. That is an indication. You need to understand why it is moving, what is the intention. You will get to understand. So, from now onwards, start seeing the POC in a different way. So, if somebody has not accessed my indicator, this is a paid indicator. You people can WhatsApp me on this number 9845209600. It is a beautiful indicator. You will get to know who is in control, whether the big player or the only retailers are trading. You get to know that if only retailers are trading, if it is a short covering rally, you stay away from the market. That is that cautions you ahead, and you will be careful. You will be not losing money. Thank you very much, friends. Nalnakshi Swami signing off. I wish you all very good morning and profitable trading. Go on. It is a learning process. You need to learn. You need to observe. So thank you very much. Nanakshi Swami signing off.